Fundamental accounting assumptions. The going concern assumption. Now, the fundamental accounting assumption, just to step back a little bit, are basically the assumptions which are presumed to have been followed in preparing annual accounts. So these are basically the basic assumptions, which are assumed to have been followed as the accounts are prepared. Okay. Now what do you mean by this? Let's say for example, there was a point A and there's a point B. If there's a ball which was initially lying at point A, and then after some point in time you notice that it is there at point B, then there are two things. This ball has moved, right? If it has moved, then the assumption is something or the other must have pushed it. So there's an assumption which is there, right? Similarly, whenever you see some kind of annual accounts which are prepared by companies, or let's say for examples partnership firms or any other person, the assumption is that these accounts would have followed certain basic rules known as the fundamental accounting assumption. The first one amongst them is the going concern assumption. Now what does this mean? Going concern, comprising of two words. Going means continuing. Okay. Going here means continuing. It doesn't mean that you're going out somewhere. And concern means a company or a partnership firm or some other organization. Now, it is assumed that when an enterprise works, a concern is functioning, it is functioning for a sufficient long period of time. Now, why is this assumption important? When we do the accounting, there are two kinds of expenditure: capital expenditure and a revenue expenditure, or revenue items, you can say, capital items and revenue items. I'll give you an example for each one of them and then tell you why is this going concern assumption important. Let's say you purchase machinery, and second is you purchase fuel to run the machinery. Okay. Is there a difference between these two? Forget from an accounting perspective, is there a difference? Let me give you another hint. In terms of duration, yes, why not? The machinery which I purchase is going to work for n number of years. N, I mean maybe 1 to 10 or something like that, right? Whereas the fuel, once it goes into the machinery, is going to be consumed on an immediate basis, right? So capital items are some items which give you some kind of a recurring benefit, as against a revenue item which does not give you a recurring benefit. The assumption is that the business is going to continuing, concern organization. The business is going to continue for sufficiently long period of time, and therefore, given that the benefit of this machinery is also going to be available for that period of time, the cost that you incur, let's say you incur 100 rupees of cost here and 10 rupees of cost here. This entire 10 rupees is put in the profit and loss account of 1 year. Whereas this 100 of entire cost, because we say that, okay, we are getting the benefit of, let's say, for 10 years, I will spread it as a cost as 10, 10, 10 for 10 number of years. Now, if this business itself is assumed to not last for more than 3 years, then this accounting is going to be incorrect, right? So the assumption is that the business is going to be a going concern, that is, it is going to continue for sufficient length of period of time, and therefore the items of expenses can be bifurcated into capital and revenue. It could be expenses or income maybe, right? So that's what the going concern assumption means. It means that the business is going to continue for sufficient long period of time, and therefore the bifurcation for expenses or income item can be done by way of capital or revenue.